Hello, this is MeTam Television exploring United States stocks. Today, we're in the United States Blue Chip Stock Analysis segment. This video is being broadcast simultaneously on our MyTam Television channel through a partnership with Mijihun Television. The company we're covering today is Uber. Uber taxis are operating in our country as well. However, in our country, it hasn't been fully introduced due to opposition from various systems and regulations. But in the United States, Europe, and other places, Uber provides a service that is widely used, especially ride-sharing services and then food delivery, Uber Eats, which is similar to Coupang Eats in our country. So they offer food delivery, and recently they've expanded their services to include freight brokerage as well. So let's take a look at this service company to see if it's a good business, what its valuation is like, and also review its future performance momentum and stock situation based on data. Uber is a company that you all know very well, and I believe it's already been introduced to many investors in our country. If you look at the recent stock price trend, this is the stock price over the past year. Compared to the recent low, it has hit a new high compared to the 52-week low, rising about 78%, which is a significant increase. Some people might wonder if Uber really went up about 78% over the past year, but yes, it has risen quite a lot. But if you look at the volatility, you can see here that the stock price fluctuations are quite significant. So if you get the timing wrong when trading, you could experience a correction of about 20% to 25% due to this kind of volatility. However, this kind of volatility was influenced more by Tesla rather than Uber's own news or events. Tesla is making robot taxis, and by operating taxis through autonomous driving and adding such autonomous driving features to Tesla vehicles, you can leave your car at home during the hours you don't use it. If you leave your car like that, it will go out and operate on its own like a taxi, earning money for you. Because of these developments and the news about when this will be launched, Uber's stock price has fluctuated every time such news came out. However, Uber is also continuously expanding its business. Even though these performance forecasts haven't been very wrong, Uber has still been significantly affected by news about Tesla's Robo-Taxi launch. But if you look at recent trends, it seems like Uber's stock price is now being less affected by that news. It's not that it's not affected at all, but if in the past the reaction was so excessive that people wondered if it would seriously damage Uber's business model, recently Uber has been showing signs of moving away from those risks and external shocks. So it seems that the stock price is becoming quite resilient to those factors. Uber offers ride-sharing, food delivery, and freight transport services. The main business areas are essentially mobility and delivery. Ride-sharing and delivery services account for most of the company's revenue. In particular, there is a membership program called Uber One. If you subscribe to this monthly subscription service, you get discounts and coupons encouraging members to use the service more often. So according to Uber's internal data, people who use the Uber One membership program contribute more than 3 times as much revenue to the company compared to those who use Uber without the membership. So through these programs, they generate membership revenue, and since members get discounts, they are more likely to keep using Uber. This creates a lock-in effect, and that's how the membership program is currently being run. On the other hand, there was also a risk that arose because of this. As I wrote below, the United States Federal Trade Commission filed a lawsuit regarding Uber One's subscription service, citing false discount benefits and complicated cancellation procedures, and the final conclusion has not yet been reached. So, when it comes to the cancellation process and things like that, the lawsuit claims that there are over 40 steps, making it so inconvenient that it's practically impossible to cancel. In response, Uber has stated that they are currently working on simplifying the cancellation process. Next, regarding the so-called false discount benefits, it means that the information is not true, and this is similar to what often happens in Korea as well. For instance, the 20% discount is only for the first month, but advertised as if it's permanent. Securities companies may claim no commission fees for trading, but that's often not the whole truth. For instance, it's only free for 3 months, and then commission fees resume. The ad should clearly state from the start that the commission is only waived for 3 months to avoid false advertising. So, in the case of Uber One, while they're advertising and gathering memberships, there are lawsuits related to these false discount benefits. But I don't think it's a risk that would shake the foundation of the company's overall business model. In other areas, as of now, there are no known lawsuits or issues that have come to light. This is the only problematic area, but it doesn't significantly impact Uber, and the company is responding to this issue by implementing policies regarding ad exposure and simplifying the cancellation process. So I think these issues will be resolved in the long term. And now...
Earlier, autonomous driving.
Earlier, I briefly discussed autonomous driving. Does this mean Uber isn't pursuing it? In fact, Uber was working on it, continuously developing autonomous driving technologies. However, the company has since changed its policy and strategy in this area. Instead of developing it themselves, they formed partnerships with autonomous driving technology companies and decided to use these technologies to provide autonomous driving through Uber. So in the case of Waymo, it's operated by Google, and in the case of Aurora, Uber directly invested in the company and owns a certain amount of shares. The autonomous driving technologies coming from these companies like Waymo and Aurora are from leading global companies. Uber is incorporating these technologies through partnerships, so if you say Uber doesn't have autonomous driving, that's not entirely accurate. So the policy itself directly
Is developed and then provided externally.
The company has transitioned to partnering with external parties. After achieving growth in the United States, we need to expand overseas as well, and currently many mobility companies are expanding a lot. Recently, in March of this year, they acquired a European delivery company called Takeriji. By acquiring this European delivery company, they are moving to further strengthen their delivery business in Europe. It seems that in the future, mobility and delivery will become the core, and expansion through M&A in certain regions will continue to happen. The company scored 68 points, up 2 points from last month, indicating it is a solid company based on the data. So it's a blue chip stock that belongs to the top 13%. That means it's in about the top 13% among all companies in the United States. If we look at growth, this is still one of the areas that's a bit lacking recently. The other aspects like financial stability and profitability are quite solid, but the recovery in these areas is a bit disappointing. So I think if future growth recovers a bit, the stock price could rise more quickly and dynamically. If we look at the smart score over the past year, we can see that it's growing little by little in this direction. So we can interpret it as the company is growing into a good one. We're going to look at a few key points in the financial statements through the financial chart. As of September 2023, operating and net profits are calculated using the trailing 12 months method, which sums the most recent 4 quarters to determine the total for the last 12 months. The company turned a profit with sales reaching $45.3 billion, a 17% increase from last year, and net profit hitting $12.2 billion, a 777% increase. So especially if you look at the recent data, you can see that net profit has increased significantly, and the range of operating profit has widened a lot. This is also clearly shown on the right in the operating profit margin, which has improved a lot to 8.49% now. Here it quickly rose from a deficit, and the net profit margin, which used to be very low in the past, is now significantly higher. So, since the net profit margin is 27.1%, we need to analyze the parts that are considered non-operating net profit. We need to determine why this happened and whether this structure can continue to increase Uber's net profit margin or the size of its net profit in the future. I'll explain this later. The cash flow statement shows $8 billion from operations, minus $3.4 billion from investing, and minus $3.8 billion from financing activities. In terms of cash flow, a plus indicates cash inflow while a minus signifies cash outflow. You could say they're earning $8 billion from operating cash flow, spending $3.4 billion on investments, and spending $3.8 billion through financing activities. A typical cash flow pattern for a blue chip stock shows a positive for operating and negatives for both investing and financing activities. When the cash flow looks like this, it indicates the company has a strong cash position. For Uber specifically, its operating cash flow is improving rapidly. So in terms of cash flow as well, you can see that it's a very good blue chip stock. The debt ratio dropped from 300% to 136% compared to 2 or 3 years ago, so it has decreased a lot. So the short-term financial risk is quite low. That negative number in financial activities earlier means cash went out. Generally, there are two main cases where cash goes out in financial activities. Of course, sometimes there are dividends, but when a company buys back and cancels its own shares, this kind of activity also results in a negative cash outflow in financial activities. Another case is when repaying borrowings, like loans from banks or funds raised by issuing bonds. When you pay back these borrowings, money goes out, right? Because the money is leaving. As an outflow in financial activities, it's recorded as a negative. With decreasing borrowings, interest expenses and financial costs also reduce, forming a virtuous cycle. This is the kind of structure Uber is currently in. We need to check the operating profit and loss that I mentioned earlier. If you look here in the annual data for 2024, the operating profit was $2.7 billion and the net profit was $9.8 billion. There's a huge difference between them, and that difference comes from an additional $1.8 billion generated from operating profit. On the other hand, since corporate tax is an expense, if it's recorded as a positive number, that means taxes were paid. But if you look at 2024, it's shown as minus $5.7 billion. That means either they received a tax refund or there was some kind of effect related to corporate tax. So if you add these two together, it's almost 8 billion, right? About $8.5 billion. So you can see that this is a factor that caused a significant difference. If you look here, you'll see there's something called financial costs. Financial costs were previously around $500–600 million annually, but last year they decreased from $620 million to $500 million. The decrease likely indicates either a lower interest rate or reduced borrowings, causing the previously mentioned debt ratio to decline. So as long as there are borrowings, about $500 million in financial costs can occur. This year's net profit might be slightly under $500 million, but it's reasonable to estimate it assuming financial costs of around $400–500 million. Besides that, we need to track whether non-operating income or corporate tax effects will occur this year as well, since the size of net profit will vary depending on those factors. If you look at the balance sheet here to see what changes have occurred, you really need to look at the assets section of the balance sheet. Among the total assets, you can see that long-term investment assets have increased significantly. In 2024, it rose significantly from $11.1 billion to around $15 billion. Long-term investment assets refer to the shares that Uber has invested in with the intention of holding them for more than a year. So they can hold shares of listed companies or invest in other companies like Aurora or Didi Chuxing that I mentioned earlier. And those investment details are usually recorded here under long-term investment assets. Due to the significant increase in long-term investment assets, we need to examine this area. For this company, there were primarily two factors. As for Uber, I already used Uber as an example in the previous video when we talked about the cash flow statement in the North America beginner lecture, so I won't go into detail about it now. If you're curious, you can check out that video for a more detailed explanation. In summary, the value of long-term invested assets fluctuates due to the proportion of these assets in the overall investment mix. Whether the company is listed or unlisted, it has a stock price. So if the value changes, if the value goes up, it gets reflected as what we call valuation gains. So if you look at the investment assets that Uber invested in earlier, these are marketable securities, which means they have a price. There's Aurora and then Didi Chuxing and also those autonomous driving companies I mentioned earlier. Aurora and then Didi Chuxing, which is a Chinese company, a ride-sharing company. They split the market between each other. Uber received shares in Didi Chuxing, and Uber's business in that region is now operated by Didi Chuxing. Joby is a company that creates transportation methods using drones. They've also invested there, and Grab is a ride-sharing company in Southeast Asia. Uber has invested shares there as well, so in places like Southeast Asia and China, they enter the market through equity investments, while in the case of Uber, they expand into the United States, Europe, and other regions directly. So when companies like Grab, Joby, Didi or Aurora grow, the fair value assessment of these companies keeps generating profits for the company, which results in non-operating profits, as I mentioned earlier. So this moves according to the fluctuations in the stock prices of those companies, depending on how the stocks included here perform or how the market evaluates them. There may be valuation gains or there may not be. The second part is deferred corporate tax. What this means is that the company was supposed to pay corporate tax, but it has been deferred or postponed. What this means is that originally this company had been incurring losses, and it hasn't been long since it turned a profit. So there were accumulated losses, and for those losses the company had to set aside something called a valuation allowance, which is kind of like insurance money. But now that the company has turned profitable and its earnings are more certain, it no longer needs to bear those losses. So if these parts can be confirmed as profit, the losses that were previously handled in deferred corporate tax are now processed as a minus, which leads to a sharp increase in net profit. So these parts don't keep happening continuously. Of course, when it comes to the deferred corporate tax-related valuation allowances, if this much has been set aside and a portion of it is reflected this time, the rest could be reflected later. But in most cases, like with Uber right now, a significant amount has already been reflected, so it's unlikely that we'll see a large-scale deferred corporate tax effect like in 2024. So, the reason why net profit surged in 2024 compared to 2025 is because of these two factors. In 2025, the fair value evaluation gains and losses will still occur since they still hold those assets, but for deferred corporate tax, it's likely that it will either not occur significantly or will be very low. Then, since the positive effect disappears here, it will actually look like net profit is decreasing. So you might wonder why Uber's stock price is rising even though its net profit is dropping sharply. If you look here, you'll see that the earnings per share shown in green surged from 2023 to 2024. The reason for this jump is mainly due to fair value gains. And of course, the turnaround in operating profit is also a very important point. Next, it's also because of the deferred corporate tax effect. If you look at 2025, which is this year, you'll see that net profit drops sharply again. So, with net profit falling, why is the stock price recently hitting a 52-week high, even an all-time high? The thing is, this drop isn't actually a real drop. If you exclude the corporate tax effect, it's actually a positive. I'll talk about that part again later. So instead of asking why things are going up even though earnings per share has dropped, it's better to interpret it as the temporary factors in this earnings per share were high last year, and this year those factors are being taken into account. This section reveals that despite a 20% increase in sales, which is consistent with the average annual growth rate over the past 3 years, earnings per share is projected to decrease by 37% this year. If you look at earnings per share, it's also in the 20% range in 2026 and 2027, so it appears similar. But only this year, it shows a sharp drop of minus 37%. It's strange, isn't it? Sales rose 20%, but earnings per share fell 37% due to the substantial impact of deferred corporate tax, causing earnings per share to jump from $0.87 to $4.58 in 2024. The portion reflecting the deferred corporate tax effect was 5.7 billion, and if you divide this by the number of shares, it adds about $2.6 per share. That's how they reached $4.5. $4.5 minus $2.6 equals roughly $1.89. So if you exclude the corporate tax effect, it's reasonable to see the actual earnings per share for 2024 as about $1.89. If this year's profit is $2.86, instead of a minus 37% going from $1.89 to $2.86 is actually a plus 51%, not a minus. So, if you exclude the corporate tax effect, it makes sense to interpret it as about 50% earnings per share growth compared to last year. When we look at that, even though both sales and profits are increasing, why did the stock price drop? So it's right to think that the market is misunderstanding or that many investors don't know this fact. So right now, if you exclude the 50% corporate tax effect this year, you should interpret it as having earnings per share growth, and those factors seem to be what are driving Uber's stock price to an all-time high. After that, it looks like it will grow by about 20%. Looking at the valuation, Uber has never been overvalued. Despite the business performing well over the past year, the company's stock was repeatedly impacted by Tesla and even slightly off guidance, leading to further hits. It's always undervalued now, and if you look at these yellow areas, these are all very undervalued zones, very undervalued. So these are actually the best times to buy the stock. Recently, over the past year, there haven't been many cases where it went above the fair value, but now it has gone past that and entered somewhere between fair value and overvalued. So we can interpret this as it's still not at a very expensive price. If you look at the momentum chart on April 17th, the short term crossed the midterm. Here we brought the midterm chart because the short-term chart is too volatile. The momentum improved and a buy signal appeared on April 17th in the midterm chart. There was a period when the 20-day and 60-day lines were arranged in order, and after that period you can see that the upward trend showed a very strong movement. Now I'll move to the website, quickly summarize Uber's current situation and then wrap up. Currently, according to our system, Uber gave a buy signal on April 21st, and since then it's up about 28%. The current recommendation is to hold. Next, if we update the valuation a bit, as we mentioned earlier, we can see that the price has risen up to this point, but there is still some upside potential remaining. If you look here, we also give buy signals like this, but during this period there were continuous buy and sell signals. At this point, the signal and chart looked good. However, when news about Tesla's Robo-Taxi emerged or the market was affected, buy and sell signals kept appearing, ultimately capturing a buy signal at the end. Fortunately, right now, after the first rise, there was a correction, and then it broke through the previous high and is now in a second upward trend. We can interpret from this chart that it's showing a good pattern like this. Next, if you look at the stock price movement, you can see that in the short term it fluctuated quite a lot, going back and forth, back and forth. Right now it's still moving with continuous short-term buying and selling. In reality, the 5-day and 60-day moving averages matching the actual stock price doesn't guarantee profits. So when you look at the exponential moving average chart, you need to be careful not to think that just because you see a midterm signal here, you should definitely buy at this point. Even if a buy signal appears on a certain day in April, the actual current price is higher than that. So you can't buy the stock at $72. It's much higher, and that's why the price keeps going up. So the best way to judge this is when the moving averages are aligned in order or in reverse, there's a high chance that the trend will continue in that direction for a significant period. So when a golden cross occurs and the moving averages are aligned in order, it's best to judge that the upward trend has become much stronger and is likely to continue. It's best to always compare it with the current price when making your judgment. As for trading signals and growth rates, even though it shows a 37% drop here, if you take certain factors into account, the actual figure is higher. You can look at it that way. For the rest, you can just check the data yourself. If you look at Smart Score, the growth score was much higher just last year, so it was 70 points, but now it's 30 points. You need to interpret this part a bit differently. Because earlier, when we check things like sales, earnings before interest, taxes, depreciation and amortization, or earnings per share in the growth section, it's actually a robot that's checking these. So growth is influenced by net profit and earnings per share. And how was the earnings per share growth rate last year? It went up a lot, right? It jumped from $0.8 to $4, so it increased a lot. We saw a high growth score for this part, but what happened this year? The forecast for this year has dropped again, and now it's at minus 35%. So even though it scored well in sales and other growth factors, because the earnings per share turned negative in these areas, it actually looks like the growth score dropped sharply. But earlier we said it was because of the corporate tax effect. In reality, if the earnings per share goes up by 35%, the growth score might not just be 30 points. It could recover much faster and more significantly. So when we look at it, we should consider the growth score to be around 60 to 70 points to properly evaluate Uber. So as I mentioned earlier, when we base things on data, we have no choice but to check and interpret the data itself. We can't check this part, but what we need to pay attention to right now are the parts where we actually look at the data, and through things like financial analysis, we can adjust and review these aspects. So if you look at other aspects, things like monopoly power, financial soundness, profitability, and cash generation are all moving in a good direction. The overall score increased from 62 to 68, which I recall as a good outcome. Since we definitely need to adjust for the growth aspect here, it would be more reasonable to see it as being between 70 and 75 points. So I think you can use this as a reference. When these trading signals change, we send out notifications, so it would be good for you to receive them like this. Especially now, the notifications we used to send by text or other means will all be changed to app push notifications. So you must install the app to receive notifications, and once you install and log in, paid members can receive all these push notifications and alerts for their favorite stocks. Especially starting next week, we will begin the news push service. So when there is information about your interests, like K-Mova's earnings announcement, you will automatically receive a push notification. Please install the app, log in, and set up your interests. Enable push notifications to receive them. So you need to allow notifications in order to receive them. I hope you can use this information to help you make decisions about overs trades. Thank you. Thank you.